If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Razak at CMtrading. Today's June 11th, 2020. And today is Thursday morning. So looking at the highlights of the day following the FOMC rate decision yesterday, the Dow Jones tumbles over 800 to 900 points after hours trading. And looking at the economic events of nothing scheduled for today, but tomorrow we do have a major number coming out of the United States called the Consumer Confidence Number. Now that's a sentiment of consumers' confidence in the economy. It's a very important number, so you do want to know what's coming out. Now that may actually change the direction of the markets right now, but as we look at the different sectors, we're going to start out with the currencies. The majors, including the euro and the GBP, both take a break at resistance and sell off a little bit just as it hit that threshold, while the dollar getting stronger. Now looking at the indices, like I mentioned, the Dow Jones tumbling, okay, to 26,400-ish level, while the Nasdaq reverses its all-time new highs, which it hit yesterday, propelled by some of the stocks there. I'm going to discuss that in just a second. But looking at the commodities, gold rallies to resistance before faltering at 1741. That's our number, to 1728 this morning. Oil pretty much wavering at $38 a barrel. Now lastly, looking at the stocks, what took the Nasdaq to all-time new highs? It's been the ones what we've been calling out. The Apple, the Microsoft, the Amazon, all making new historic highs in this environment where we're watching the Dow Jones, which represents some of the traditional economics, okay, economy, which includes bank stocks, transportation, healthcare, and others, kind of waver in this type of environment. But let's take a look at the markets and see what we can expect from today's trading. So we're taking a look here at the Euro USD. It's hit that 1360th resistance-ish level right there. And now trading just shy of it by 20 pips. Not a big retracement, but nevertheless a retracement. So just be aware that it is retracing around these levels. Now, between the two, the GBP is more volatile and its retracement is a little bit more clear, trading at 2668-ish level, retracing from that 2753, which is much higher retracement, okay, about 60 to 70 pip retracement there. So with that said, okay, all eyes are going to be glued on the reaction of the Dow Jones this morning. Now jumping into the USD ZAR, I just want to mention this. You can see that the dollar is getting much stronger here, not much stronger, but stronger at 1672, just bouncing here after taking that slide from a low of 19. So we've making some progress in the rand versus the dollar as the economy's kind of settled down post-pandemic, or call it, post first wave pandemic, okay, as we enter the second session. Now looking at gold, all right, this is what's so beautiful about trading the range. That is, between June 5th and today, we rallied from 1675 to 1740 and then retracing. Beautiful 1 week trade. Could have made 60 to 60 points on that trade very easily on that little just range, okay? But it's beautiful opportunity there. Now we're at that top of the range, closing in on that middle point of 17-ish level, trading at 1727. Now looking at oil, really just wavering here at $38 a barrel, not doing much. It's in pretty much a very tight range overall this week as OPEC Plus has cut production just to maintain the price level. Now looking at the Dow Jones, it's a different story. We're having a correctional move in the Dow Jones after we had this massive rally over the past month and a half, okay? Going from 22,500-ish level to 27,000. That's 5,000 points, okay? 5,000 points is exactly half of what we retraced from 29,000 to 18,000 when the markets actually crashed. Okay, so that's an important factor. 27,600-ish level was our high, and now we're trading at 26,500-ish level, a nice retracement of 1,100 points in only 1 day of trading. Now, okay, what's a little bit confusing here, if you will, is that the Nasdaq, although it sold off yesterday, it's still above 10,000 and strong. And why is it strong? Well, let's take a look at the stocks. Apple, $352 stock. Now, earlier this week, it was trading at $325. That means it went $27 up and breaking that resistance level and causing this to just break out higher. Now at these levels, we don't know how much higher it could go. Now, will it make a correction today because the futures are down? Yes. But at these levels, it's saying that the Apple shares, Apple company is doing fantastically well, considering that we're looking at a 6 months and to 5 months futures of what the stock is worth, right? Now looking at Amazon, same story, making all-time new highs at 26,048, okay, 2,648, excuse me. It hit a high, remember, of when it came out with earnings of 2,400, and so it's over 200 points higher than what it was when it came out with earnings just last month. And Jeff Bezos, the CEO of Amazon, saying we're going to hit some rocky roads here. Well, you can't tell that by the price of the stock. Now, jumping into Microsoft, this is also a favorite of ours that we've mentioned again and again, going from 189 to 196. This is breaking all-time new highs. Let's take a look at a monthly chart. All-time new highs on its dead highs. Now, we're in pandemic environment here, ladies and gentlemen, so this is quite fascinating that the markets are still very strong in certain sectors while others do grapple. Now, if we look at some of the other factors like the bank stocks, JP Morgan down, okay, to 105. Okay, now this is classical, where we see that the tech stocks are strong and some of the more classical economic stocks, okay, that we're accustomed to in pre-tech era are faltering here and having a hard time because the economy is having a hard time altogether. So interesting things coming together. Make sure that you know that this number is coming out tomorrow in the consumer confidence. A lot of weight is added to it. It's just as important as the FOMC and NFP because it really gauges consumer confidence in the markets. This is Fred Razak. I want to wish you guys a great trading day. Thank you.